Mortgage brokers are required to declare what they want a lender to pay them for what's called lender paid comp, and it's a percentage of the loan amount. And typically the range of percentages that we as a broker can request from the lender varies from about 1% up to 2.5%. And what we talked about is how that is a major factor, in fact, probably the most direct factor that affects what kind of rate you're going to get from that broker. And in these days, most loans are originated at 0 points. Borrowers generally don't pay points these days. So we had shown how a broker who only needs or wants a 1% lender paid from their lender, the rate could, with 0 points would be 6 3/8. That was at that time. And actually the rate's, I think, still about that level. And then we also showed that if the lender paid comp's 1.5%, the rate goes up to 6.5. The lender paid comp goes up to 2%, which, by the way, is the average in the industry. On average, mortgage brokers ask for a 2% lender paid comp from their lender. So at a 2% lender paid comp, that rate isn't 6 3/8 or 6.5 for 0 points. It goes to 6 3/4. And then for those outlier brokers who want to make as much money as they can on one loan, who want 2.5% from their lender, that rate goes up even further to 6 7/8. Again, that rate spread, 6 3/8 to 6 7/8, is all based on 0 points to the borrower. So what we didn't talk about is the payments. At the 1%, 6 3/8 rate, the principal and interest payment, this is based on a $500,000 loan amount, was about $3,100 a month. On the other end, at a 2.5% lender paid comp and 6 7/8 rate, the payment was $165 a month higher, almost $3,300. That's a pretty big difference. Even at the average industry of 2% lender paid comp, the monthly payment at 6 3/4 was $124 a month higher than if you're dealing with a broker who only requires 1% from their lender. And guess what, folks? In case you haven't watched the show or remember, here at MortgageWorks, a majority of the loans that we originate, we are getting a 1% lender paid comp from our lender that we deliver the loan to. That directly correlates to you, the borrower, in the form of a better rate and a better payment. If you're at the other extreme, 2.5% lender paid comp, you might not think $165 a month is a lot. But guess what? Over the life of the loan, a 30-year loan, that's over $50,000. Now, most people don't keep their loan for that long, but nonetheless, every month that goes by, you're paying that extra amount for the same $500,000 loan, and you're getting it from broker B instead of, we'll call ourselves broker A. Why would you do that? That's not rational. And that's why, if you're a borrower, I encourage you to shop around. And I include even borrowers referred to us. Feel free to shop around. We're very confident we're going to compete very, very well against any broker lender that you're going to get a rate quote from. And I encourage you to get a rate quote from anybody you're talking to about a mortgage. Get it up front. And if you're going to compare lenders or brokers, get all the quotes on the same day to make sure you're getting quotes based on the same market conditions. And Jeff, I actually ended up kind of stumbling into an example, I think, of where it can be at play.
Okay.
Late last week, after the show, I got approached by a realtor who was having trouble with another broker here in the Valley who was originating a purchase loan for a condo that's on leasehold. It's a leasehold property. It's on leased land. And that broker ended up declining the loan because of the lease. And I looked at the property. I could see there was other activity for that, where that condo was located, from some major lenders, Loan Depot and some others here locally, which was a clue to me that the leasehold should be okay. So they approached me about taking a second look at that. I went ahead and originated the loan and registered it with the lender, and it's in underwriting now, and I think we're going to get a loan approval. But as I was discussing this transaction with the borrower, I almost fell out of my chair when he happened to mention that the other broker he initially was dealing with was quoting him an interest rate of 7.5%. Now, this is a condo. It's a modestly priced condo, $285,000, 20% down, $228,000 loan amount. And by the way, folks, for a condo, if you put 20% down, you're going to get a higher rate than if you put 25% down. The sweet spot for condo pricing, keep this in mind, is 25% down, not 20. There's a 3/4 of a point add by the federal mortgage agencies for condos that you have less than 25% down, because a condo is considered a more risky property type. But that, be that as it may, when I priced this out, when we registered the loan 2 days ago, we registered this loan not at 7.5, but at 6.625.
Wow.
7/8% lower than what he tells us, or told me, that this other broker was quoting him before they declined the loan. So this, I think, is a very good example of how lender paid comp, the variation from broker to broker, can be very significant in terms of the kind of rate you're going to get when you get that quote from the broker. So I just think that people need to be aware of that. And that's why I say, if you are going to be getting some quotes and you're noticing a difference in the rate between brokers, a very good question to ask is, say, okay, got your quote, got your worksheet. Can you tell me what your compensation is that this interest rate you're offering is based on? And I think that's a very good discussion to have. I think it'll put on the forefront some transparency. Any broker worth their salt should honestly answer that question and be very direct and tell you what they're going to get paid by that lender. And then ask them to explain, why that's affecting the rate the way it is.